Joining us now is Dreyfus and Mellon chief economist and macro strategist Vincent Reinhart. Vince, good to see you. That's pretty much where the market is, 50-50 on November and December. Ahead of the inflation report, out of the inflation report. I feel like if you're a hawk, this number sort of backs up your case because it shows that we are susceptible to hotter than expected and stickier inflation. But if you're a dove, it backs up your case because the trends continue to point to disinflation. So what do you do with it?
That's the great thing about an economic report that runs 43 pages. You can always find something to support your view. And the doves and the hawks are going to do exactly what you said. What are the doves emphasizing? Patience. They're going to see there's some parts of the CPI that are cooling and that we can expect some more slowing in the really sticky inertial stuff, the non-housing core services. And that's just going to feed through. The hawks are going to say, hey, there's still persistence in inflation. Core inflation was actually up a tenth this month.
Yep.
First time in a long time. If we don't react to that, we risk it getting those expectations of inflation getting embedded. So something for everybody. One thing that was clear, September's off the table. They never were going to act at the upcoming meeting. They've paired the meetings. They act at one, they don't act at the other, so they can average 12.5 basis point hikes per meeting, the intentional slow progression of firming. This was always the pause meeting.
I get that they don't want to harm the economy too much unnecessarily, especially wreck what so far has proven to be a soft landing, which is a tremendous feat if it lasts. But what is the big risk in not hiking another time this year with core still at more than double where the target needs to be, and they can always just cut into next year?
I think you already gave the answer, right? The risk is persistence. That if inflation stays far enough above core, people will just become complacent with that. They'll expect that to be the average inflation rate, and it'll therefore be much more difficult in the future to get inflation lower. So the hawks argument is about persistence. Persistent inflation becomes embedded inflation expectations. Inflation just becomes salient to households and firms, and that's costly for the economy over time. And their argument is deal with it. At one level, it doesn't matter all that much because the key part of Fed strategy right now isn't another quarter point. It's how long do you keep the funds rate at a firm level once you've hit that plateau. And if you raise it a quarter, then you don't have to keep it for as long as that high level. If you don't raise it another quarter, you'll just have to keep it there a little bit longer. The key message you're going to hear from Chair Powell is the plateau, that they're going to be willing to keep the funds rate at a firm level for a while, and that's the message they'll convey in all the other stuff that gets released at the FOMC meeting, including the summary of economic projections, their forecast.
Interesting. The CEO of Home Depot is presenting today at the Goldman conference, Vince, and says, kudos to the Fed. Let's see if I can find the exact quote here. You have to hand it to them, roughly paraphrasing, for managing to bring inflation down as much as they have without tanking the economy. I wonder how long you think that kind of constructive feedback continues, at least from corporates.
Tell me what the unemployment rate is. Tell me what earnings projections are. That's got to say something. Look, big contrast, that other Princeton graduate who was chairman of the Federal Reserve than Jay Powell was Paul Volcker. And when he started raising rates to tame inflation, he was getting 2x4s in the mail from builders with a note attached. You use it, we can't. You've killed our business. There were tractors going around the Fed building. The remarkable thing over the last year and a half is how well it's turned out for Jay Powell. They've managed to reduce inflation a lot without tanking the economy, as you said. Problem is the last mile's hard. Getting that inflation back to goal and anchoring it there is going to probably require some pain. And when there's pain, there'll be complaint.